6 out of 7 winning days, 3-day win streak. From the lows of the year to all-time highs, just like that. Interesting price action and a lot of different stuff today. Whew. EA down 17%. American Airlines bucking the trend in the airline stocks. We got Jim Tassoni coming on at 8:35 to discuss his outlook on the markets. And folks, we got some rants coming today. I'm just warning you. And it's not just from Dennis, and it's not just from me. It's pre-market prep at its best.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. The Bears are trying. We're down 5 3/4 handles after just a major winning streak, upper right chart. Let's look at the buck. The buck is up 20 cents, 108.16. TLT flat, 87.50. Off the lows of the move. USO up 34 cents, matching range from yesterday. GLD giving a little bit back from yesterday, down 48 cents at 253.95. Silver couldn't hold that 28 level, down 41 cents at 27.64. And what do you know? Bitcoin futures down for the second day in a row. That they're down about $2,700 at 101,675. Good morning to Triple D coming on the stage. Christian Fromhertz coming on the stage. Gentlemen, win streak right back up. Let's get the pom-poms out. S&P 6,500, 7,000.
I wouldn't put it past this market. The buy the dip mentality is just rampant out here. So it's going to be hard for bears to really, dig in and chew and eat the market up a little bit. But they're trying in the overnight session. They were trying yesterday too, where you saw profit taking in those leaders. Netflix opened at its high tick. Oracle opened right near its high tick and went straight down. So two of your leaders from yesterday obviously closing very weak. So that's a consideration, as you are seeing some profit taking here, but you also have this buy the dip mentality that, this Trump pump is just going to continue for the next 4 years and you got to buy every dip. But I won't argue with it. It's been working here. Obviously sell the rip's been working as well, but buy the dip has been working here too. So I just think you're going to get a lot of chop, but it's going to be hard to shake the buy the dip mentality here. Christian, how are you?
Good morning, guys. Good morning. I think that we've had such a nice rally, and I thought yesterday, I didn't do much yesterday. I wanted to just basically go for a walk because I didn't think it was going to be a great trading day yesterday. I thought after a multi-day rally that we were due to just kind of there's going to be some profit taking, and especially when you look at the S&P, coming right back to those previous highs, and now you're going to need we've had such a nice I'll call it a thrust. The breadth has expanded. There's been really good participation, but now the question comes into play about whether we can get through those highs. And there's a lot of stalling out I see, and we're going to talk a little bit about the semis but there's also been fantastic moves. So you can't really I can't really complain too much. Yeah. I think you just have to be realistic. And then, you need another catalyst. And then what do next week, I think we got a lot of catalysts going on. And I think that's where it's going to lead to.
You're Christian, exactly right. Calm before the storm, chop before the storm, positioning before the earnings storm that we're talking about here. And next week, we got some big companies that are going to report. Obviously, we're going to get into mega cap tech, but this week, and even tonight, or we don't have very much. Texas Instruments is really the only stock of note reporting tonight. But next week, just quickly going to our earnings calendar here, it's going to get started. Not so much on Monday. SoFi is going to report for a lot of those retail traders that really like, those stocks, the certain stocks there. But we're going to get started Wednesday. Wednesday is going to be the big day. You want to know who's on the schedule for Wednesday? Again, forget the nasally voice. I may never get better. Tesla, Microsoft, Meta. Those three all reporting on Wednesday. That is going to be a crazy day. And then if that's not enough, Thursday, Apple, Amazon. I don't know if anybody cares about Intel, but Apple and Amazon. So in those 3 days, we're going to get 5 of the Magnificent 7 within 24 hours of each other. That's going to be some movement there. So that is what we are setting up for. That is what is going to dictate the next move. Those 5 earnings reports that are coming starting next Wednesday.
Before we move on to the earnings, Christian, and this is just going with our earlier discussion about sentiment in the market. We were looking for, an unusual year here, right? We went, the fade trade with Dennis straight up here. You had something that you wanted to share on sentiment from the AAII.
Yeah, so this AAII survey comes out, and it's just another one of those gauges of not inflation, of sentiment. And I think that's another reason why we had such a nice rally too, is that the sentiment got a bit bearish.
You want to show it, Christian? Do you have that
Uh,
available?
I don't know if I can.
Uh, Maybe I could get it off the.
Yeah, I don't know. If not, I can just kind of.
I got it. I got it.
But I think that's also something to just to kind of keep in mind is just when sentiment gets a little bit on the side of being bearish, right, and things are kind of ripe for a reversal. Now, in these some of these surveys are very fast in terms of both reporting. Some of them are weekly surveys, and they also can change very quickly. So, I got this from this is Helene Meisler, who put this post out this morning. When you look at it measures like the bears and the bulls, and the bulls jumped 18, and that gets to a level of 43.4%. And the bears, which we're picking up, the bearish sentiment drops 11 points down to 29. So, you kind of put some of these things together and say, hey, sentiment was really, you know, got to something where things finally, like, bearishness crept in. And, like, it's important to pay attention to some of these things, because when people finally kind of pivot a little bit, that's when people get caught off guard. So and just the last point that I was going to make here is just, again, how fast people can get bearish to bullish very, very quickly. And I think with the price action that we've seen last week, where we are now, it is accompanied a lot of bullishness getting back into the market.
It's all bullishness right now. That's what I said. It's not going to be that simple for just the market to roll over here. It's going to maybe take a catalyst here. So I don't think we're going to get this like major sell-off in the next few days. I don't think like, an imminent, like, okay, well, it's going to give it right back. It's going to take those earnings reports to do that. And maybe those earnings reports are good and it continues to drive it. So, I mean, making any market call at this point in time, 4 trading sessions ahead of maybe the biggest earnings day, obviously the biggest earnings day maybe of the quarter, the biggest 2 days for sure, but probably Wednesday maybe being the biggest one. I mean, it's going to be difficult to just say, I think we're going to chop around. I think we're going to have some positioning. But, to Christian's point here, and to Joel's point even, we're bumping up against major resistance on the S&P here now. 609, 608, multiple highs in December. We just came from 575 straight up into it. So, I mean, you throw something, you throw a ball against the floor, throw a ball against the ceiling, first time it bounces off. Throw it enough times to break through the ceiling eventually. But I got to think, first time, it's going to be tough to just blow right through here. So I'm not going long here until I at least see some reports that could take us through it.
All right. Do we want to get to the reports here? And Christian, you brought up what's hitting the semis. We were looking for the catalyst. I mean, we're not down that much, but Christian, you picked up on a stock that can't pull the chart up on.
Yeah, so this is, I believe, what a South Korean name, I believe, is a name that's, and again, like, I think it's like partly the reason. I think there's so many names went up so much yesterday. ARM Holdings was a name yesterday that just, I looked at the stock was up like 15%. So somebody was asking me on the Twitter sphere, like, oh, what's the news on ARM bringing it down? I'm like, Well, I'm like, did you see it was up 15% in one day? I mean, that's a ridiculous move. Like, and
it goes down 2%, Christian, and they're like, "What's going on? What's the news? Why is my stock down 2%? Well, this went up 20% yesterday." I mean,
yeah,
on stupidity. I mean,
right.
this is one. Okay, I'll just say this is one of the dumbest rallies. I mean, all of a sudden, Trump's like, got these, guys on, CNBC, and they're airing it or whatever. I guess it wasn't CNBC, but CNBC's airing it. And all of a sudden, it's like, oh my gosh, these are all AI plays. Let's buy. I mean, we know this stuff already. Just because we know Trump's going to be a market, tutor. He's gonna, he obviously, likes the market going higher. He sees it as a success. He's going to be a market pumper. There's no doubt about it. But to buy Oracle from 162 to 192 in 2 days because Trump is, talking with Larry Ellison. I mean, this is just getting a point of ridiculousness.
Oh, what? Yeah.
That's a ridiculous move. Oracle, we said yesterday, doesn't make those kind of moves here. And, it was an easy short off the open.
Did you catch it? Did you get it?
So here's a bad story. So I called this out, and I was trying to short the open. It was trading 191, and then they started moving the opening price down, like where it was going to go. So I'm like, crap, I'm going to miss my short. So I throw it out to short at 189.70, and then it opens at 190, and then I don't get filled, and I'm like, what the hell? I didn't get the fill. And the reason probably is, one, because I was on the right side of the market, but I didn't have the order in before the 8:30 or 9:30 marker. So they don't have to put you in there. So then they can have discretion, and they probably like, it's going down. We're not going to fill you on your short. I mean, that's a little bit of, me just complaining about it. You got to get the order in there. So anyways, I had the order in there. I was too high at 190.5. It opened at 190. I had a second order in that I put 15 seconds in before it opened. Didn't get executed. Then I was trying. Then I got sidetracked, and I actually didn't even get the Oracle, which is like so disappointing to me because I called it out. I would have made a lot of money on it because it went straight down 5 points. That's a poor execution on me. I should have thrown it way lower, but I was like, I thought it was low at 190.5 because it was trading 191. Should have threw like 188 OPG and you get it for sure. So, I mean, that's a poor 25 years of, executing orders. I didn't put the order in there, right?
But one heck of a call, though. Really nice.
Yeah, and some people thank me for it. So, I hope some people on pre-market prep still made some money off of it. They were smarter on the execution side than I was. One other issue I have is on the open is I just get busy too, Joel. I mean, if you're trading one stock and you're just going to trade one stock, you can watch it, you can do things with it, you can go. I don't have that luxury. I'm not trading one stock on the open. I'm often trading 20, 30, 40 stocks on the open where I'm moving out of closing positions. I'm getting orders in there. I'm busy. It's why, I'm very busy that 10 minutes, 9:20 to 9:30, getting orders, moving it in, closing out positions, getting ready, prepping for that open. So sometimes you just miss something, that, maybe you're even talking about, and you just don't get back to it. So maybe
if you were long, you wouldn't have missed it.
If I would have had that order to buy it, 100% I would have been filled.
I meant if you were long the stock.
Because I would have thrown it lower and been aggressive with it for sure.
Yeah.
The one thing is, like, when it's trading 191 in the pre-market, so here's a little bit more on execution tactics. It's trading 191 in the pre-market, like right before it opens. Well, you throw out a 188, all of a sudden, if it opens 188, it could pop back up to that 191. So you don't want to be too low on that OPG either, and then get a shakeout in there. I mean, it shows, there was a little bit of shaking, in the first few seconds too. It didn't open right. It opened at 190 was the official NYSE print, but there were some trades going off higher than that as well on the other exchanges. So it kind of did flush right away. But the first 10 seconds was a little bit of opening chop right there, just looking back at it.
And I just want to mention that Netflix, when we talked about it, and I'm like, man, if you have a target of 1,000, this is when we were talking about it, I'm like, whew, boy, that's just a nice juicy number. And then that one opened up. I think it pretty much opened up at the high tick, or much closer to it than Oracle did. But no, I mean, profit taking, Netflix got up to 100.04, I think, or 05.
Never hit it in the regular session.
No.
Never hit the 1,000, which is like, when stock goes to 995, you almost always think it's going to hit the 1,000. It didn't. It opened right at the high tick. The official NASDAQ open was $9.99. The high on the day was $9.99. If you shorted that open, you literally took a zero heat, not even a penny of heat. It opened right at the high tick and straight down. And I mean, this is what we're talking about even, Christian, I don't want to get your thoughts here too, but this is what we were talking about yesterday. When I first started trading in 1999 at Bright Trading Office, in Southfield with you, it was something you stressed to us all. I learned a lot from Joel, like back in the day, because I was a young 22-year-old kid just coming out of university, didn't know much. There was it was 20 traders in there. Half of them were floor traders that had moved from the floor to Bright Trading, so they had lots of experience. But you were just always adamant about how many times a stock will open at or near its high of the day or its low of the day. And I mean, this was just such an opportunity for Netflix. Opens right at its high of the day. You get that short, that opening print. You take zero heat. And I know people are so scared to short stocks. Like, I mean, in a market environment, there's people out there that firmly believe you only lose money shorting stocks. I mean, if you know how to execute, I'll tell you, you can make a lot more money shorting stocks than you can buying stocks if you know how to execute, because they fall much faster than they go up in normal markets. I know lately it hasn't been normal, but the shorting is like just, it's such an important tool to a professional trader. I mean, again, people think it's downright evil, some people, but it's not. It's what keeps the market efficient. Christian, what are your thoughts here?
I think that, it's a great point about shorting too. And I think too, if you're mainly holding long positions and you have a day like you had yesterday, and it's a very nice thing to do. It's not, you can think about it too, like in terms of your overall portfolio. And instead of selling something, if you don't want to, if you've got a couple holdings that you don't want to sell, even though they're up, right, you can pick something and it's really nice against your portfolio to have something that you can basically say, well, this is just too extended and so forth. And, so I would just look at it as well. And that may help the individual investor to say, in your overall portfolio context, you're still net long, but you're just offsetting some of that risk a little bit, instead of thinking about, the whole shorting aspect and whether or not that's, it's not, predatory or something like that. It's not, you're just basically, lessening your overall portfolio risk. And you're doing it at a really good time too, when you have a multiple day move higher where just everything went ballistic. I was just looking at the chat too, people talking about some of the space companies too. I mean, that was just crazy. We talked about that Rocket Labs yesterday that was up 30%. I mean, 30%. I mean, so, number one, if you're not ringing the register on some of this stuff and at least taking some off, some profits, then you can't really be upset when these things pull back. But I mean, they're also just giving you opportunities where they're just going a little bit too far, to such a quick move in these things, and they're moving too far too fast.
I mean, I think you got to take the money and run sometimes. Joel, go ahead.
No, I was just going to say with the Oracle. I mean, and Dennis, this is going back to the book, and I know it's not as not as relevant as it used to be. But when I look at a stock, I just think about the book all the way from 170, the high of the day or 2 days ago, up to 190. I mean, there just had to be so many people that aren't like us, aren't paying attention to everything. They had an order in at 185 to sell 5,000. Do you think they pulled that order? After, so all those orders, so you can fulfill all those orders on that opening print, then you got to find more buyers at that level. So that, when I make those kind of calls, and you talk about the relative volume in it, and sometimes they scoop them up and they keep going. But to me, it's just holy man. I mean, I didn't short the stock. I would never buy that stock. I would never buy Netflix up at open, because after you have that opening print where the institutions are participating, well, they're like the institutions that had their order out at 1,000, thinking, "Oh, I'm just going to get done." Oh, no, they didn't, and they just, you had to sell into a declining market. But man,
you just made a very good point here, though, Joel, and I just want to reiterate it because just the way you worded it was very good. The stock's gapping up 10% or whatever it is, or in the case of Netflix, 20%. And everybody's so excited. They want to be in. And then that opening print happens. Then what has to happen for it to go higher? You have to find more buyers. More buyers after you just cleared the whole book, so it's empty below. Now you got to find more buyers to keep pushing it higher. People who weren't thinking about it all night, that didn't get in on the opening pin, that are just thinking about it now, 1 second after the open. It's tough to do that. And that is why gaps fill. That is why you often talk about, we
Oh,
talk
look at
about
the
in
gap at
trading,
Oracle.
the gap fill, because it's difficult. Sometimes you get follow through, sometimes you get the gap and go, but a lot of times you get the gap and fill. And in the case of Oracle, I said yesterday, I don't think it's going to fill that gap, but damn well it was trying. Damn well tried. I mean,
It did.
191 all the way down, filled 2/3 of the gap yesterday. Now, is Netflix going to fill that earnings gap? Probably not. But I mean, damn well tried a little bit. 916 opens 999, and then all the way back down, try to fill over half of it. I mean, that's impressive there. So just keep that in mind that, gaps do tend to fill if they can, and you have to have follow through for them not to fill. So that's why Joel and myself don't chase price, because it's sometimes very difficult to find those extra buyers after you just found all these buyers to push the price that high.
Yeah.
And
No,
and that's
go ahead.
also kind of how yesterday was too. I looked at things and I'm like, I can't like, because I didn't have enough. The only thing in the semis, which were the semis were very very strong yesterday, and I had on Broadcom, and I didn't really have much else on in that space, and I was watching Nvidia, and I'm like, geez, I had FOMO yesterday because I was looking at some of these names, and I'm like, I should have positioned in a couple of these things, and oh, the other name I had on was CRDO, so I'm not that bad. But I was like, I did have FOMO. I saw some of these semi names, and I'm like, okay, I've got some exposure on, but sometimes you just gotta like, maybe hindsight 2020 shorting would have been a good idea, maybe on that arm, but I also didn't want to get in front of a freight train yesterday with arm, but I
Yeah.
had FOMO yesterday, and I was like, I gotta get up from the screens a little bit because I don't want to chase these moves, especially with looking ahead in terms of what we have next week, where we've got all these names reporting, and it's a big unknown. But yeah, let's get to that chart that Joel's got up there. What's
Holy
going on
mackerel.
there?
Before you go, this is a great question here, and I want to address it because often we're a teaching show, and we should take time, especially on non-earnings day, to teach. It's a fantastic question. I want to throw it to Christian here too. I've got my thoughts on it, but I want to put it to Christian here too. Now, I would say, isn't chasing the definition of momentum trading? My answer would be no here. I want to know what your answer to this is.
Well, I mean, when I look for trade setups, I'm looking for things like, so since we're going off tangent for a minute, like
Yeah, do it.
bring up GEV for a minute.
Sure.
So that's like a good example of what I tend to look for when you look at the top right chart. See that base
Blow it up,
sideways.
Joel.
Okay.
So sideways, 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 that you have for basically a month. Once this thing starts to take that next leg higher, right, it's a chance for momentum, and it's a chance for a breakout. So I will generally try those breakouts, and that's something that I got in, right? But I'm certainly not going to, as it goes up, about halfway up or so forth, I am not going to chase. I'm not going to start initiating a position there. In fact, I think at that point, it's like, hey, you got to go to a different stock, right? That is chasing. But if you could begin to kind of catch those first moves, and that's where like doing your homework and so forth, going over charts, watching for those first moves, or even like, so if it's the first move, and it's even if it's a decent move, like let's say that stock goes up 4%, but it's just getting out of that sideways base and that consolidation. Something I would like to, obviously, in a perfect world, catch it as it begins to move up 1 or 2%, but you're not perfect. So even if it goes up 3%, like I may begin to kind of, I'll say like that I'm scaling into the position then, because I don't know, especially like the time of the day too. If it's the first like hour of the day, it's going to be a starter position for me. But as the day progresses, and if it can hold those gains, I might begin to kind of scale in a little bit more, because ultimately I think it's the beginning of a possible move. And we don't know with breakouts. Some breakouts fail. It depends on the market that day too. It depends on the overall dynamics. But I will give the shot on a potential momentum move, and that is GEV is a momentum name. It is a momentum category. It's that power theme that has been crazy. It's the same thing with the VST and the CEG. So, but you can't chase, in terms of like once the move is kind of mature, and again, we don't know how far mature is. Then I begin to say like, no, I can't. I can't go after that name. It's too mature in the move it's made already.
I think that's a fantastic answer. And I mean, what he's talking about is waiting for consolidation station after a big move. So you get the big move, you have the big move up, from September to November. Then we consolidate that move for 2 months, just hanging out, in that 300 to 330 to 350 area. Then it starts to break out. That's where I think you're executing if you're a momentum trader. You're saying the momentum is still there. It's just paused here for a second. I never like to jump on a moving train and then all of a sudden, you start going. But if you're buying GEV now, who knows? It could be a rug pull where it just falls $20.
Yep.
I mean, it did that yesterday on the
now
earnings.
You're chasing.
Yeah, now you're chasing. So the bottom line is, yeah, sure, chasing is momentum as well. But I say you can be a momentum trader and you don't have to chase.
And I think, Christian, one thing with you is like when you're looking at something like this GEV, you're also taking partial profits, into this.
Oh yeah.
And then the more extended it gets, and this is one thing that, Dennis and I are not, great at, is like, take me out on the downside, like I'm not going to try and pick a top, but if it goes below a level, then uncle. And I think that, so you'll get out of some with the momentum, but then you'll get stopped out on some when it comes back.
That's exactly it. Like I'm taking a couple targets no matter what as it's rising, and then I'm going to try to sit with that last 50% or the last quarter of the position, and then I'm using a trailing stop. And folks, it's one of the hardest things to teach newer traders because they don't want to sell. They want to try to time the top all the time.
Oh, yeah.
But when you're trying to time the top, like nobody knows where the top is going to be. So you have to get used to on a day like where it does pull back that, yeah, you're going to give back a little bit that day. But if you've been holding for the last in that particular stock a week or 2 weeks, you don't really care because you've crushed it on the way up.
Okay, we got to go to this EA. We do have, hey Dennis, we do have jobless claims at 8:30. I don't know if that's going to be a big market mover here, but holy mackerel, EA, and I looked at Take Two, and that stock is not, it's down a little bit, but where's my information here? So EA comes out and boy oh boy, just lowers estimates. Reported Q3 results slowdown in global football franchise. I mean, bad news. And I mean, this is just an absolute killing here in it. If someone, I'll just look at the monthlies here, and I'll say there was 3 monthly lows around the 120 area. So similar to well, no, it's not quite. It's tough. It's tough when they're going down on this because there's going to be a whole lot of people, sell stops and things on the open. You could get another flush off the open, but wicked price action in EA off the lower guided earnings miss and lower guidance and some downgrades.
It's always hard to buy a stock when they're lowering guidance. I mean,
Yeah.
even if you're at support, and which it is, it's stopping right where you think it would be. If I was shorted, I would probably bring the short in here to initiate a long on day one and try to be the hero and say, yep, the July, 2023 lows are going to hold here. We're going back a year and a half to find support. Those are likely to hold, so I'm going to initiate the long here. It's difficult. It's a difficult trade. Maybe as a long-term investor, you believe in gaming, you believe in EA long-term. Maybe you could say, this is a good price. I'm going to get in here, but I mean, when you're lowering guidance, it's hard. You don't get that imminent turnaround story usually.
Boy, I see
Take
this.
Two obviously down in
oh.
sympathy as well. Take Two has been best of breed forever. Still sitting up, only down $4. This may be an EA chat saying this is EA specific with the game. That may be the case. I'm not a gamer, so I don't know all this stuff. But I'll tell you, it's support on EA. That's one thing. I don't know if I'd be short the stock here.
I would, yeah. I'd looking at the monthlies. 116.53 was a monthly low, so there's a buy zone. I'd say 116, 53 to 120, and then if that's not good enough for you, the actual low from 2023. Wow, giving back a lot. The low in 23 was 108.53. I don't think we're going to see 108.53 in today's session, but keep an eye on those monthly lows, and the open will be important. Christian, are we going to get a pass out of you on this one, or do you
Pass.
have some
Next.
pass?
Jobless claims is next.
Here
We
we go.
are
223.
jobless claims
I'll throw it
coming
in the
in.
chat here.
Not moving
Coming
at
in.
all. Nothing burger.
Nothing.
Nothing burger. SPY didn't even move, really. We moved like a nickel. Oh, there's a dime. I mean, okay, so it seems like a nothing burger. It doesn't look. We're popping a little smidget there on the IWM. TLT, which is always what is most sensitive to these numbers here, kind of just hanging out. We're leaking a little bit after we've had a pretty good 4 or 5 day rally here. We're just hanging out. So it looks like they don't care.
Since that chart is up there in TLT, take a look at what has happened. Like everybody got rah, liking the move in TLT last week, but it's starting to kind of leak again, and
Yeah, it's stalling.
right where it needs to like keep going. So I think this is important. This is going to be important to watch as well in terms of market dynamics. It's okay for this to kind of settle in a little bit after the rally that we saw last week in TLT, but you don't want to give it back. So that's kind of also what I'll be watching over the next week, besides all the big earnings reports that we're going to get, is can TLT kind of firm up and like stay around these levels and then possibly continue with the turn, because all we have right now is a bounce from the lows, right?
Yeah.
We talked about, over a week ago, a technical level that it looked like a possible double bottom, not a double bottom, but at least there was support in TLT, going back. But we don't know if it's now the heavy lifting has to come where, hey, we've bounced and, anything can bounce. And TLT is still in a downtrend. So we'll see if this can kind of carry over the next week or so. But I don't want to see it. I don't want to see TLT begin to drift back towards those lows again.
Guilty until proven innocent. That's what I would say there too, Christian. And I mean, obviously, we're going to get more economic data. We're going to get more clarity on the tariffs. That's going to move TLT as well. I know Trump, is talking about 25% to Canada and Mexico the February the 1st, 10% to China, which is interesting. That's only 10% to China, which is why China stocks have lifted a little bit, because I think they were expecting a lot worse, but they've actually lifted the last few days since the commentary here. It's difficult for the Fed to make their decision here, and that's what's going to drive TLT. So I think, we just got to be waiting on more information, even economic data, but more clues from the Fed.
All right. Do you want to sneak in some airline earnings before we have our guest coming on at 8:35? You had the sneak leak on ALK that came out
early.
Surprise! Yep, came out early. What did you have here? Nice beat, 97 versus 44. Slight beat on sales. EPS, I don't know why they're going to lose money in Q1. I have to figure that one out. But adjusted EPS for the year, a little bit below the estimates. ALK, I will just say UAL had that incredible report yesterday, and they sold into it.
Too much. We've moved too much. UAL was $50 in October. It doubled in 3 months. And airline stocks, folks, just because it has an A in the ticker symbol, it doesn't have an AI in there. It's an airline stock. It's an absolutely ridiculous move. I know you were shorted in your acronym, Joel. I think you're going to end up being right here with the punt. But with that, it's just too much of a move. I mean, it's probably the biggest 3-month move that UAL has ever had.
For sure.
Maybe ever. I don't know if I've ever seen UAL double in 3 months. That's unbelievable, folks. Unbelievable. And if you're buying it up here, you are absolutely chasing.
I was just going to say it's pretty good to observe too. Like it's the same thing when a stock is on the lows and they come out with bad news and the stock doesn't go down anymore. It actually rallies a little bit.
Yep.
It's the opposite of that. You have like that was a really good report by United, and if it didn't hold the gains, that's where that maybe this is all priced into the stock. And I would I think that I agree with you guys. I think it's signaling that it's looking toppy.
The easy money has been made here. You think UAL is just going to double again? Again, if this was an AI stock, If this was a space stock, a storied stock, what's the story here? It's an airline. Airlines typically have been very bad investments. Not like throughout the years, just look back, a long, long, long ways. I mean, UAL was $98 in 2019. So, I mean, really over the last 5 years, even despite this 100% run you just had, the stock is barely up. I mean, these have not been good long-term investments. It's been a fantastic 3-month investment. And yes, maybe UAL is best of breed now. Delta, firing on all cylinders as well. If you want to own an airline, those are probably the ones. But this has just not been a good place to be long-term. So that's why I think, when you have 100% moves in 3 months, you absolutely need to turn from investor to trader and ring the register.
You know what? It also makes me a little bit. Look at this oil move. I mean, when's that gonna? I mean, that's the biggest cost for airlines, right? Is the price of oil? That's a huge move. That even with the drill, baby drill. So we'll keep an eye on that. But
yeah, remember when airlines used to move opposite to oil? Remember that? It used to be like oil's up, airlines go down. They don't even give a crap about that now. Like the algos are all wacky now. So they don't even care. Oil's up? Well, we don't care. We have more people flying. We'll just raise ticket prices. We'll deal with that. Will you? Will you? Well, American Airlines is dealing with that. Well, I'll talk the AAL earnings.
Okay. All right. You know what? Let's do that.
We
got our guest. We got our
Jim
guest.
into this conversation.
Yeah, we got to get Jim
right
in here.
This conversation.
Yeah, Jim Tassoni, CIO, Armor Wealth Strategies, going to be joining us here on PreMarket Prep. Jim.
He's smirking.
I'm enjoying the banter back and forth. What can I say? I sit in the background. I'm not only a guest, I'm a fan.
Well, what do you think about these airlines? I mean, these have been incredible moves here. UAL doubled in 3 months. What do you want?
Yeah, and I 100%. I wish I could have some kind of contrarian take to what you guys were talking about, but I 100% agree. And I also think, and this sort of goes to the macro backdrop that I'm seeing out there, I think that we have more inflation than perhaps we think maybe around the corner. I think inflation's going to stay hotter than expected this year. I'm not saying runaway rampant inflation, but I think it's going to stay there. And I think that's going to put a lot of pressure on stocks like airlines as far as their input costs go. I see oil at least staying here, if not drifting higher. That's a huge component cost for them. So I'm not, after the run they've had, I'm not a huge fan at this point.
Let's go to the inflation talk here. Actually, I was talking with our boy Blue yesterday, and he thought that the reaction, because what really sparked this rally was the PPI number last week, right, and the inflation data, and he said, to him, he just thought it was just a gross overreaction to it. And, the CPI, but hey, the headline is the headline. They see the algos move on it. What are you seeing underneath the hood, that's making you think this inflation, like 2% is not right here, going to be a little bit stickier than we think?
Yeah, I mean, a lot of the data that I look at, and I kind of, again, being a momentum guy, not only do I trade momentum on individual stocks when I'm in my trading portfolio, but I also look at the momentum of underlying economic indicators. And if you look across the board at like various secular inflation, whether it be, imports and goods and services as a percentage of GDP, fiscal policy, so on and so forth, these indicators that I'm looking at anyway are not coming down. And I actually put together a measure, and I probably should have sent you guys this slide, and I apologize for that. But I looked at sort of what was the trend of inflation from 2010 to 2019, the core trend on the PCE. And we averaged about 1.6% on that core PCE trend year over year. If we look at where we are 2020 to date, so now the first, I guess, as crazy as it is to think, the first half of this decade that we're in, we're trending more at 3.5%. So more than double where the PCE was for that 10-year period. And if you project it out based on the trends that we're seeing, I do expect it to moderate a little bit, but I still think that we're probably looking at like a 3 to 3.2% inflation gauge, which is double what we had for that 10-year period coming into 2020. So I think a lot of people who are calling for this 2% inflation target, I mean, I understand 2 to 3 doesn't seem like a lot, but when you look at it from a percentage standpoint, if we hang more in a 3% trend as opposed to a 2, that's a heck of a lot more inflation when you compound over a decade.
Gotcha. Jim, great to have you on the show. So, we were kind of just kicking the tires a little bit about what we've seen in terms of that momentum and so forth. So, given what we've got, over this next week and with earnings, are you kind of sitting back here a little bit? Are you putting money to work? What's your strategy, I guess, over the next few weeks, given that we've seen this pretty nice rally over the last week and a half?
So I'm going to tell you guys something that you never hear professional money managers or anyone who comes on a show say. I'm a little confused by this market, and I'll be the first one to admit it. And when I get confused, I tend to throttle back and let the market tell me what to do. Now, I know I've been in the camp of inflationary pressures since September. It's largely proved to be correct from a positioning standpoint. But now I'm in this camp where, are we in an inflationary regime where we see inflation and slowing growth, or are we in a deflationary regime where we still see inflation, but we have growth to go along with it, which would obviously be much more productive for risk assets? So I have been nibbling to your guys' stance. I'm looking, and we talked about this at the beginning of the year, kind of a more choppy type of market. So when opportunities have presented themselves, I have been nibbling on dips, but I haven't been backing the truck in, putting everything in. I'm up to about 50 to 60% long in my portfolio. At the lows, I was actually as low as 30 to 35.
Oh, wow.
So I'm back up to about 60. I've nibbled at various points over the last couple of weeks. I still like as hedges in this market, and you guys talked about great hedges. I'm still a fan of gold. I've had a gold position on, a fairly large one. I think that's a good place to be in this market. And I'm still short the longer end of the curve here via TLT and now IEF. I'm short both of those ETFs. I still think we see rates higher. I want to cover that short if we see the 10-year around 5.5%.
Wow. 5.5 would be like, where would that take us on the TLT?
Armageddon.
That would probably take us down into like the 70s.
Yeah. Yeah.
That's a serious. So you've been all over this, Jim. I mean, you were one of the only people that came on back in September and talked about being short the TLT at $100. I mean, you've been all over this trade, and it's such an impressive move because TLT, it's not like a stock that moves around. This is a big move down, to lose 13 points to where we are here at 87. So you still think more pain ahead here for potential bond investors?
I still think there's pain on the long end. I think you definitely want to play, if you need to be in fixed income, you want to stay short in duration. You want to play that shorter end of the curve. I think the long end continues to creep higher. Like I said, my target for the year is we see 5.5. And again, betting steak dinners here, I think we see 5.5 before we see 3.5 on the 10-year. So,
wow, that's a big call, and the trend is your friend. I mean, we were just talking about TLT, and it hasn't, it's bounced. We don't have a major like turn. It's still in a downtrend. So that's a bold call, the 5.5. I mean, I'm with you in terms of I don't think it rallies to back to 3.5, but I don't know about the 5.5.
5.5 would be like that. What happens in the stock market if we go to 5.5 on
and here's the interesting part, and this is why I've kind of been hesitant to go all in on the market, and why I'm focused on certain sectors that I would hope would provide me with a little bit more defensiveness in the event of some additional market volatility. But I actually came across a really interesting stat the other day, and this sort of blew my mind. Do you guys know we're heading into 2025 now? It's been 10 years. 2015 was the last time we had a year in the market that didn't feature either a 20% drawdown or a 20% rally. So we think the market, everybody says last 10 years has been great for the markets, but we've had a lot of volatility baked into that. So I guess my point would be, again, when we talk about this volatile, whippy, choppy market, it would not be a huge stretch to see a 20% correction. We've had one every year, almost either a rally off a 20% low or a 20% correction for 10 years. So to see a 20% drawdown from these all-time highs would not be out of the question or that far out of the norm for what we've been seeing lately. So I think you see a TLT a 10-year at 5.5%. I think that could accompany, one of these type of drawdowns. The other thing I would really pay attention to, and you talked a little bit about the tariffs, and it seems like they may be a little bit lighter than what we expected, but that's something to pay attention to, because the last two times we got into sort of, I'll call it a trade war with the Chinese, and we saw the yuan severely devalued, and that was 2015 and 2019. Those were accompanied by 13% and 19% drawdowns in the S&P 500. So pay attention to that rhetoric, pay attention to rates. I think those are going to be your key indicators over the next, 2, 3, 4 months.
I think, Dennis talked yesterday about, like the obvious trade, things that are going on with, Ellison and who else was on with Trump and the AI trade.
Yeah.
But what about what Jerome Powell? I mean, he told us rates were going up, right? And they went up, and then he did a pivot, floored everybody, and the market reacted. But I mean, he kind of told us, hey, rates are not going to be, going down as much. So, talk about the obvious trade, talk about the Fed. I mean, they've been pretty, pretty forthright with what they're planning to do. But
very transparent.
Yeah. Probably the most transparent Fed we've ever seen. Absolutely. And I think part of the condition is to, not believe it, but Powell has told you what he's going to do. And he's largely, with the exception of a couple pivots here and there, he's largely stuck by it. So.
Okay.
And they're kind of on pause here. I mean, they're waiting for information. I mean, we're all waiting for information. What is this tariff situation? What does this do? I mean, it's a big question mark. This administration is, going to be a driver of price for everything. Obviously, just as much as we saw Oracle and, all the tech stocks and the AI plays popping ridiculously yesterday because of Trump commentary, it can work the other way here too. We don't know what he's going to say, and that's why I've been saying to the chat, we need like a Trump tracker that tracks on a continuous basis here, because all of a sudden you see the stock market move, you're like, what's going on? I right away was like, what Trump say? What Trump say? Is he on social?
Or what he didn't say, or what he didn't say.
What didn't he say?
We're now
the AI stocks are selling off because Trump didn't pump them today.
Yep. And now even, what Musk is saying too carries a lot of weight. He's got his town square on X, and then he's coming out and saying, well, this AI plan, I don't know if the money's really there. And all of a sudden you see some air come out of it. Like anybody involved with this administration is going to move markets, and we do have to pay attention to it.
All right, Jim Tassoni, CIO, Armor Wealth Strategies. Jim, they like your contrarian points of view here, given two sides of the market. Things go up, things go down. So thanks very much for joining us, and we'll bring you on again next week. Same time, same place. Jim Tassoni.
Sounds good, guys. Have a good one.
Thanks, Jim.
Thanks, Jim.
Go Blue.
But by the way, I didn't get to applaud him on this, but that call on gold was very good. And I actually picked up some gold in my longer term portfolio too, as it was starting to make the turn, and it's been outperforming. For whatever reason, I tend to look at, because there are two assets that like I'm kind of on the fringes of about whether I should be long gold or Bitcoin or possibly both, but I like to watch the relationship between the two, and gold has been outperforming Bitcoin just in the short term, like over the last week. So I'm long gold, and I like the call too. So
Jim's been all over it. I mean, he's just made some fantastic calls on this show, so that's why we bring him on as a regular guest here, because he does a really good job. Christian, so here we are. This setup here. How do you approach this day? This is a tough day. Like, I'm struggling with it too, because with the big move up, we're pulling back a little bit here. The AI stocks are pulling back a bit. Then you've got some rotation happening. The banks are trading a bit higher. Some of the stocks that were down yesterday are trading higher, like your consumer staples. I mean, is it just going to be more rotation, like understanding these things? And how do you approach this day?
So it's a great question. I think just observing a little bit, we've seen so many good moves, and it's almost like I was thinking about this as Jim was speaking as well about, it's a little bit of like red light, green light. We've seen breadth expand and so forth, but things are just extended. So I would be looking at maybe some things like getting involved, but lightly. I just think that we need to kind of come in a little bit. I go back to where everybody kind of thought about things as we entered the year. I think things have the chance to rip like we've seen, but I'm kind of like, I need a little bit of a pullback to kind of get more enticed about some things. So I think things are just a little still, even if they reversed yesterday. I'd like to see prices come in a little bit more. I have a tough time. I like the financials. I like the, we're going to talk about GE probably next, which is making a nice move too. But I liked what Jim had to say about, he's a little bit, and don't worry, we'll edit this out so we don't have the word confused, because you can't say that. I'm just kidding. But he brings up a good point. Like, I'm not sure that the industrials are going to carry here. I'm not sure that, a couple other, about energy stocks, right? I've done very well with this energy trade over the last couple of weeks, but I'm watching what crude is doing, and crude has kind of stopped advancing. And if you look at a couple stocks like an LNG yesterday, they actually reversed to the downside. So I think that those names, like, I would be a buyer of those names, but not yet. And, I was looking to see how deep that pullback was going to be in LNG, and it just kept on going down. So I like these groups. I like energy. I like financials. Tech, I have to see I want to see more of the earnings
Wait
for next
see.
week. Yeah, so
I'm with you on tech. I think I'm not initiating any new positions in tech at this point in time until we start seeing all of the earnings trade that's going to come in. I did a few things yesterday. I sold a little bit of my Dell because it was just a big pop. I think I'm going to get back. It actually went right to 120, so it did pull back significantly after I sold at 113. I mean, there's a possibility I could get this back today. I was thinking I'm going to sell up here near 120, rebuy it down here to that 110. I mean, that actually can happen here in one day, which would be pretty cool. But, just, lightening up, a little bit into the strength. I was thinking about selling my Micron too, but now it pulled back already today. I was just looking. I remember I just picked up that Micron. We talked about that.
Wow.
Yeah, I came back. I picked up 94. Well, in 6 days, it went to 110. I mean, I'm up like 13% on it in the 6 days. I mean, if I believe in the fade trade, you get 13% move, in 6 days. It's like, take the money and run. We're going to keep saying Steve Miller band market here. So it's still, I think you still got to be thinking about that.
And
like,
I
be
also
more of a trader.
I try to go to your playbook, because so right now, like I said, I'd like to see some things pull back a little bit more. But so I don't need to be putting on. So if that's my view, which it is, then I'm not really in the game right now to put on a lot of swing trades. So I kind of go to your playbook, Dennis, and say, okay, if I can kind of hit some trades where it may be a day trade or maybe a little bit of a scalp where something's extended or if something has gone down too far, but I begin to kind of lower my duration in terms of the time frame of my trade. So yeah, I draw on kind of a little bit of your guys' strategies when we're doing what we're doing right now in the market.
My approach for today is going to be different than it was yesterday because I could not resist that opening fluff. And I really thought we were going to flush, like the open, fail at the pre-market high. You see that a lot, and then back and fill a little bit. And I got, you know, um, I was wrong. And we ended up peaking later in the day, but I didn't have the patience. I didn't, there was like so much fluff in the market. A lot of times, as I said, I'm looking off the open, get in early off the open, put the stop in, and forget about it. That wasn't the case. So today, instead of being super aggressive, to me, like that close from yesterday, really a great level. We closed at 61.20. 50. We could even see that price overnight. If the Bulls are still in control, they're going to get us green early on. We're going to hold the 61.20. We're going to go up and test yesterday's high. So going to be a little bit more patient. I don't know. Do we want to do the AAL? We were going.
We talked
That's
it
about.
briefly. I mean,
Yeah.
it's pulling back, it's bouncing though. Buy the dip mentality
Ugh.
is still out here, folks. That's what we're saying. You can't shake the buy the dip mentality that's just in this market. So, even the EA, like it's right here at support, but the buy the dip mentality is there. So just be aware of that. It's not bouncing at all. Stocks lower guidance is difficult. AAL may have been just bar set too high. UAL blowing it away. The EPS was good. The guidance was fine. I mean, the AAL, earnings report here. Let's just talk about the actual earnings. They were really good. I mean, and then the stock sells off 10% on it. 86 cents versus 64 cents, 13.7 billion versus 13.39 billion. But the guidance was a bit light. That's why they look at the full year, was actually in Q1 to lose money and they're supposed to break even, basically being lost 4 cents. So the guidance was light here, but that earnings report itself was good. Now, remember, folks, airlines are seasonal. Their earnings are always seasonal. So they always have a really good holiday season. People are traveling during the holidays. And then they always have the spring lull where the earnings for airlines are always crappier in January, February, and March because people are broke, spend a lot of money traveling around the holidays and not moving around as much. So just remember that usually the Q1 is usually a lighter quarter for all the airlines, but they're anticipating, it's going to be even lighter than they thought. That's why stock is down.
I just brought up this chart too. I'll see if you can see this because we were just speaking of this, and this is what American
Nice.
Airlines attributed the company to the current fuel price forecast. So there you have it. We were just talking about that relationship with oil and the airlines. So that could be also why they're stalling too. I mean, you guys just hinted at that, and I just saw this note coming out from Bloomberg talking about jet fuel swap prices, and there you go. There's a little bit of a change there. So I think that's all. Maybe that is now starting to impact those names.
Okay. All right. Let's go one more here. And everyone's favorite stock, GE. Woo-hoo-hoo-hoo. We bring good things to light. Look at GE traded up $15. I don't know. Do we even need to look at the numbers here? I guess I could bring them up for you.
Yeah, I
Where?
can grab them. I got them right
Oh,
here in front of me. The numbers are good. $1.32 versus $1.04, 9.87 billion versus 9.6 billion. So beat on the top, beat on the bottom. Guidance slightly higher. It's not a huge guidance raise, but it's good enough. I guess the stock is just loved. Has there been, just question, has there been a better, business separation, call it financial engineering, whatever you
man.
want, Joel? But this spinoff of, GE Health and then obviously GEV and, to make GE just the aerospace, there's been no company that has, done this better. I mean, this stock was in despair 3 years ago, GE. And now I think if you add up all the parts, it's probably near all-time highs, if not breaking out even farther. I mean, this has just been an incredible run here for GE Vernova. GEHC is kind of the forgotten child, but it's healthcare, obviously.
Yep.
And healthcare has just been a mess. But I mean, this has just been incredible, the turnaround story here in General Electric.
Can someone do the math and figure out, like, because where you would be at with the reverse split?
Yeah, do that math for us, because you got the spin-off and the reverse splits and all that. We know it topped out back in the year 2000 for 20 years, didn't go anywhere. I got to think a lot of those losses probably are back here, especially with this GE Vernova moving up as much as it has.
Christian, you've been talking about these stocks, haven't you?
Yep. And I was trading GE before they did the GEV split. I was trading GE quite a bit. I was really liking what it was doing and how it was acting, and it's a big turnaround story. And the timing of so I was really liking the momentum that I was seeing in the stock. But what great timing for the spinoff in the GEV, because they just, this power trade right now. By the way, there's an analyst call out. I chuckle a little bit because I think that this is pretty late at this point. But another one of these companies that's in the wheelhouse of the GEV, Constellation Energy tapped his best idea at Guggenheim. I mean, okay, so this is CEG, but this is another situation where the question earlier about, momentum and like chasing, there's no way I would chase GEV at these prices. Pullback, this is where you have to be patient, wait for a pullback in these things, because I think that when these things pull back, they set up again, for possibly next leg higher. But yeah, so going back to GE, wow, GE really timed that spinoff incredibly well. And Dennis, I don't know. I mean, you make a great point about, has there ever been a company spinning off names like this that has done so well?
Well, look at GE itself. So just the performance of that, 2023, it's went from 6 to, but then you got GE Vernova out of that. So like in some cases, where the stupidity of Intel, they don't give the shareholders anything. They just, basically spit something off and we get nothing for it. I know they say, oh yeah, but you still own the shares through Intel. But we know Intel's so shitty at doing everything. And I'm using that word intentionally there because that's how much I hate Intel. But I mean here, as somebody who's done everything right, the management here, just to give props, was this done under Culp? All of it under Culp?
Yeah, it was. He
really turned this. He struggled for a number of years here, but they figured it out here at the end. I think his job was on the line for a bit there too. They're lucky they stuck with him because, obviously his turnaround took time, but he figured it out, and it's been an incredible turnaround story. So Culp, obviously the big part of all of this.
All right, real quick before we wrap it up, Tease Trades asked about ISRG a few times here. Reporting after the close today.
And breaking news here too. Before you go to ISRG, we like to do the breaking news here.
Yes.
Spruce Point coming out with the short report on Construction Partners, ROAD. That's a great ticker symbol. I don't know if I've ever traded this one, Road. They find these companies though. So if you're wondering why Road just, hit the skids, it's because Construction Partners is a short at Spruce Point. So they just released that. Guy from Spruce Point's going to be on CNBC later today to talk about this new report here. Stock's only down 5%, so it's not going to hit too hard, but it's down.
Wait for the company response. And if they give a response, like who was the other company that said, "Oh, we may have to you
never want that response.
Yeah,
we may have to look at our bucks here.
ISRG. I don't know what to say. Technically, I can't find anything wrong with it. Trading up 455. Just a huge move coming in over the last 4 or 5 days. So if you had a target in this area, maybe, I don't know. I don't even know if there's any premium in like the 620 or 625 calls. But if you have a target in this area, I have no idea the report. I'm just saying they better hit the report. They better give you some guidance. They better, talk about a buyback because, it's just been an incredible move there. ISRG. Guess who's coming on? Or you want to make a comment on that one,
Yeah,
Christian?
so I was just gonna say, well, they gave their guidance. They came out with their numbers last week. It was, and
Oh,
that's what brought the stock up another leg. So I would not be expecting much. I think if you've been in the stock, like you got what you were looking for. I wouldn't expect anything more. That's
but the
personally me.
algos will pump it on this. The algos will reread the headline,
Oh
and then
yeah,
they'll
the
cap
market
it
that
up.
prices in nothing. They'll forget about this. So write this one down when they go to report. We already know that they raised guidance, so maybe we know they're going to be, and they'll buy it anyways. It's what they do. You're right, Joel. The algos are just absolutely like written just to take headline numbers and trade on headlines. They see the beat raise. They don't know that it reported last week. They won't. Maybe when AI actually starts trading these markets, they'll get smarter about it. But right now, lots of money to be made from dumb algos.
Did you guys want to touch on that one thing you guys were both a little irritated about, or do you want to hop off from last
GameStop,
night? Yeah.
Roaring Kitty, the
One last rant.
master of manipulation here. It looks like again, or he's the master of the memes. I didn't say that. I meant the master of memes. That was a Freudian slip. But I mean, it's so interesting to me, like the Roaring Kitty. How many people just follow this, and the algos are all over it. So what was very interesting last night, he tweets the meme. Can we show the meme, Joel? Can you bring it up here?
Let me see it. Yep, I can.
I
Go
can
ahead.
find it if you can't.
I
Joel
don't
find
even.
in the background when me and Christian have a little rant on it. I mean, what is this story? It's just getting so old. Like we tweet a meme and the stocks pop. I don't even know what this stuff means. I mean, he tweets his meme of this dog that's like, getting forgotten and has been forgotten for years. Here it is. Bring it up. Play the meme. Play it. Play the damn thing. So bring
Okay,
it up.
okay.
Full
I
screen.
got.
Hit the little full screen thing.
I know. I go, but there's a little trick that when you do this here.
Okay.
Okay. So give me a second.
What does this mean?
So while he's doing that, let's see once he starts. Oh, there we go.
What in my heart
If you hit the little full screen in the bottom right corner, you make it bigger.
forevermore.
Yeah.
I'll wait for you. The clock will tick away the hours one by one, and then the time will come when all the waiting's done. The time
Am I buying pizza stocks, Chewy, the dog stock? Am I buying GameStop? I have no idea what the hell I'm even supposed to do with this information. But you know what? Last night, so just to give you, what happens on this, he tweets this at exactly 8 p.m. I don't think that was an accident. So he tweets this when the market closed because he's tweeting it to all the Robinhood traders that are on there. On Robinhood last night, GameStop trade up to $30 on this. It was up 10%.
What about Chewy? I'd buy Chewy instead of
Chewy was up too. Chewy was up
got an
3 or
upgrade, by the
4%
way.
on it too. Chewy's now giving it back. But I mean, at what point in time, do we just look at this and say, what's up? I mean, is he selling into these pops? That's what I would ask. If I was a regulator, just saying if I was a regulator, I would say, is he tweeting these memes and then selling into these pops? Is it intention? Or is he
I don't
just
think so.
tweeting these memes
I don't
for
think
fun?
so.
Maybe he's not selling at all.
I don't
And
think
if he's
he's
not
selling.
selling at all, he can tweet whatever memes he wants. So,
I don't think
I
he's
have no problems at all. If he's not selling into it, no problems at all. If he's selling into it, then it's a different story. Christian, but I'm just getting bored with it. I think the market is getting bored with it too. Because GameStop paused 10% last night on this. It's only up 1%. So, I mean, Robinhood traders, all who bought this stock last night, all lose because it's down right now. So, I mean, chasing these pops on these, memes, it's just getting old, man.
Tomorrow, what I want you guys to do is when a stock comes up in the news, I want you guys to make a meme, and then we have to figure out if the meme is positive or negative. And I mean, I think it's just childish. Like, hey, if he came out and he gave a video about why he likes Unity software or whatever stock, right? Then I would say, okay, this is good. Like, he's got a thesis, he's got a fundamental thesis. Because correct me if I'm wrong, but when he originally came out with the GameStop, like he did that. Like he said, hey, here's my analysis. Here's why I'm bullish.
Yeah.
This stuff is different. And I'm not a fan of this stuff either. Like I got enough things to do than to try to decipher about what kind of puzzle and what, to me, it's a waste of time. But if you like something, come out and give your case, give us a pitch. not a meme to try to create some momentum in the Robinhood after hours market. It's dumb to me.
I really believe it was intentionally dropped at 8 p.m. Eastern, right as soon as the regular exchange is closed, because it would have the most effect if it was just, Robinhood, trading on Robinhood. I really, truly believe it was intentionally dropped at 8 p.m. Like it dropped right. Like, look at the time of the tweet. It is exactly 8 p.m. That's right when the regular exchange is closed. So I think it was timed that way on purpose. So it's so just childish is the best word for it. I agree. I think this guy was great when he was doing his analysis, putting his CFA hat on. I believe he is a CFA, and figuring out his investment thesis. But this whole, game of just like memes and being in the back and like it feels like just icky. It just doesn't feel good anymore here. So I think I get, I just don't like even, and what, who's making the money, folks, that people don't want to hear this either. The people who are shorting into these pops are the people who are making the money. The people who are like, this is stupid. It popped 10%. I'm going to short this stock. Well, you just up 9% instantly here. So I think he's losing his influence as well. And at a certain point in time, he's going to become irrelevant.
Okay. So tomorrow's guest, okay, I'll just say it has an animal theme to it.
Okay. Sticking with the animal theme.
Yeah. So who is it going to be?
How
many guests have a name?
Let the chat guess.
Okay. How many guests do we have on?
Oh, I already know who it is.
Yeah, they got it. Yeah.
Moo. We love.
Yeah, no, it's not Roy Kitty. I don't think we're gonna get.
No, it's not Roy Kitty. We'd like to get Roy Kitty.
All right. Hey, I'm not paying you guys overtime here. It's 9:10. We got it.
We love Scott Shellady, the cow guy. My buddy Jeff, it's his favorite guest. So this is for you, Jeff. Scott, tomorrow.
Okay. All right. Thanks for joining us here on PreMarket Prep.